Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 63, published on July 30th, titled Jim Cramer's Solar Stocks and Much More, and presented by Investing for the Soul. InvestingfortheSoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, just a reminder, I do not evaluate any of the stocks or funds mentioned in this podcast. Furthermore, if you're concerned about the ESG and sustainability ratings of any stock or fund included in this podcast, check with your broker's site for such information. If your broker doesn't have this information, sign up for free with Morningstar, and you can gain access to company and fund ESG sustainability ratings. But please note, I received no compensation from Morningstar or anyone else covered in these podcasts. Also, if any terms are unfamiliar to you, simply Google them. Let's begin with CNBC's Jim Cramer on Monday revealed his top 3 solar stock plays. That's the title of this article, and it's by Tyler Clifford on CNBC. Here are some quotes from Mr. Clifford's article. I think your portfolio needs some solar exposure, ideally with First Solar, Enphase, or Generic. We needed to wait for the big post-election shakeout before recommending the solar stocks, Cramer said. Continuing, I think that this group has a lot more room to run. Generic has been one of my favorite ways to play an increasingly unreliable electric grid, and while the stock looks expensive up here, management's got a terrific track record, Cramer said. End quotes. Want to know which stocks millennials and Gen Z favor? This article reveals them. It's titled, These Stocks Are the Top Stocks for Millennials and Gen Z, by Ihsan Fanusi, appearing on Yahoo Finance. Quoting the article, a recent study by financial source DailyFX revealed that Apple, Tesla, and GE are the most popular stocks for millennials and Generation Z investors, being English. The study collected data from Robinhood and examined investing preferences among millennials and Gen Z across the United States and United Kingdom for the 12 months ending April 2021. GameStop was not included in the study. Overall, the technology and automotive industries dominated the market for young people, with companies like Microsoft and Tesla generating significant investment activity. Interestingly, electric vehicle manufacturing company NIO was the top security for millennial investors. Sustainability has been a key factor. Plug Power an alternative energy company, was the top stock for the younger generations in 7 states. In the UK, Neo, Airbnb and Palantir were the younger generation's most commonly traded stocks. End quotes. Continuing in the renewable energy theme is this article, 3 renewable energy stocks to buy if the market crashes. Each stock is recommended by a different analyst. Here are the names of the analysts, followed by the company they recommend, and then followed by quotes from them on that company. 1. Travis Hoyam picks Bloom Energy. One of the most exciting growth markets in renewable energy is hydrogen technology, and Bloom Energy is one of the industry leaders. Bloom Energy hasn't gotten as much attention as Plug Power or Ballard Power Systems, both of which have higher valuations than it does, but Bloom is a better operator with more revenue and higher gross margins. It has a long growth runway into a total addressable market that management thinks could be over $2 trillion. What Bloom Energy hasn't generated yet are profits, but could be profitable in the next few years. 2. Howard Smith likes Brookfield Renewable Partners. The stock's dividend yields around 3% at recent prices, and a market crash could provide investors the chance to lock in income at an even more desirable yield. Brookfield Renewable has a portfolio of almost $60 billion worth of renewable energy assets globally. Brookfield shares are up about 40% over the past year. Brookfield aims to increase shareholder distributions by between 5 and 9% annually. 3. Daniel Forber recommends Lucid Motors. The company says the Lucid Dream Edition automobile has an EPA-rated range of 503 miles on a full charge, and that its 1,080 horsepower engine can go from 0 to 60 miles per hour in 2.5 seconds or less. The specs speak for themselves, but it's going to take a lot more than a hot car for Lucid to become a rival to automakers like Tesla. Lucid's marketing strategy resembles the one used by Tesla. Begin with the low-volume rollout of a high-margin vehicle, then transition to a lower-margin, higher-volume strategy over time. End quotes. Looking for ESG ETFs? You're in luck with this article. 7 ESG ETFs to buy now by Jeff Reeves on money.usnews.com. Here are some quotes from him on each one. 1. iShares ESG Aware MSCI EM ETF. It's benchmarked to an MSCI index of emerging market stocks. Emerging markets obviously hold a lot of promise because of their growth potential, but they also can be home to business practices that many Western investors would frown upon. Allocations include 35% of assets in China, 13% in South Korea, and 10% in India. It has an impressive $8 billion in assets under management. 2. iShares ESG MSCI EAFE ETF. Another solid option for international investors is this sister iShares fund, focused on EAFE markets, that is, Europe, Asia, and the Far East. While you won't get exposure to companies in the US and Canada, you do get access to developed markets to supplement the EM approach of the prior iShares fund. With nearly $6 billion in assets under management, this global ESG fund is the go-to option for those looking for exposure outside the US. 3. iShares Global Clean Energy ETF. Another iShares fund tops this list of leading ESG funds. It's hard to argue that anyone concerned about climate change or carbon emissions would overlook the iShares Global Clean Energy ETF as one of the most important ways to invest with environmental principles in mind. With about $6 billion in assets under management, this fund is a liquid and established way for investors to play top names in the space. 4. Vanguard ESG US Stock ETF. At about $5 billion in total assets under management, it is among the most diversified when it comes to total holdings. Around 1,500 total components make up this fund, and they are all US-based corporations. It cuts out the worst based on rankings for ESG criteria and presumes the rest are above board. 5. Xtrackers MSCI USA ESG Leaders Equity ETF. Another substantial US-based ESG fund, tallies a total of nearly $4 billion in assets, comprised of a focused list of about 280 securities. About 28% of the fund is in tech, but it diversifies nicely after that, with the number 2 sector being healthcare at 14%. 6. iShares MSCI KLD 400 Social ETF. At more than $3 billion in assets, it's pretty much a kind of S&P 500 index, with the 100 stocks that rank worst on social criteria being excluded from the lineup. Unfortunately, though, it has more total stocks than the prior Xtrackers fund. It's even more biased towards tech, with 33% of assets in the sector. And 7. iShares MSCI USA ESG Select ETF. With only 200 or so holdings in its portfolio, the prospectus claims this ESG ETF only backs stocks with leading environmental, social, and governance practices. You get exposure to some traditionally popular domestic stocks without sacrificing your principles. End quotes. Next article. Adria Vassal of Canada's Corporate Knights magazine has penned an article titled ESG BS Detector. Do new green funds support the carbon transition? Here are some quotes from her piece. We look under the hood of BlackRock's new carbon transition ETF to see if it delivers on its low-carbon promise. This ETF invests in large and mid-capitalization U.S. equity securities, tilting towards those that BlackRock believes are better positioned to benefit from the transition to a low-carbon economy. The fund is dominated by all the standard big tech firms found in conventional ETF holdings. More than a quarter of this fund's holdings trip our red flag alarms. 14 energy companies with less than 20% of their near-term investment in the energy transition, including Exxon, Chevron, Kinder Morgan, and ConocoPhillips. 8 climate policy blocking companies, including Berkshire Hathaway, Goldman Sachs, and Valero, as well as a few energy companies. 3 big brands selling industrial meat, including Spam King Hormel. one deforestation and palm oil laggard, namely Kraft Heinz Company, which Global Canopy gives a big fat 0 to when it comes to its overarching commitment on deforestation, a primary contributor to climate change. BlackRock's position. BlackRock's new carbon transition ETF leverages BlackRock's proprietary climate analytics to analyze a company's ability to thrive in the transition to a low-carbon economy, resulting in a portfolio with almost 50% less carbon intensity than its Russell 1000 benchmark. Bottom line, and this is from Corporate Knights, look before you leap. End quotes. Now, many of you will recall how a little-known fund, Engine Number 1, was able to muster enough support to install 3 pro-climate investors on Exxon's board of directors. Well, now they've created a special fund to be in a position to influence the boards of numerous other companies towards pro-climate and ESG policies. Watch this interview on Yahoo Finance titled, How Engine Number 1's new $100 million ETF Plans to Change Impact Investing. The link to this interview is on this podcast's webpage. The interviewer is Julie Hyman, who interviews Yasmin Daya Bilger, head of ETFs at Engine Number 1. Well, these are my top news stories with their stock and fund tips for this podcast, Jim Cramer's solar stocks, and much more. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. Talk to you next on August 13th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.